Hey, everybody, this is Charles Dobbins. Welcome back to this week's podcast version of the Multifamily Investing Academy's podcast. I am Charles Dobbins, the founder of the Multifamily Investing Academy and the host of your podcast here today. And I am here with Brenton Wickam. All right. He's the founder of Urban Rock Properties. Got started back in 1994. I think I'd already lost my first million by that time. And he is one of the top commercial real estate brokers in San Mateo County. Now, okay, I don't understand much of geography beyond the Mississippi. So we're talking California here.
We're talking ground zero Silicon Valley.
Oh, okay. Oh, all right. So you're Northern California. Oh, all right. All right.
Yeah. We're just south of San Francisco. The peninsula is the market.
Gotcha. All right. Because my son lives in San Francisco. Have you ever been to the Angler restaurant?
No.
God, it's one of the top restaurants in San Francisco.
Okay. All right.
Come on, man.
Well, can't hit them all.
Yeah, you got to find that one out.
Raising daughters, so there's a lot of time to go out and eat these days.
Yeah, and my other daughter went to University of San Francisco.
Okay, wow. So the area a little bit. Mine are a little younger, 12 and 14. So
mine are yeah. I've given up custody of mine. Pretty much so.
Big pay raise.
No kidding. I didn't have one of them just got married, and in my father of the bride speech, I said I knew this guy was a keeper when he took her off my cell phone plan.
Hey, there you go. That's the winner. That's a long way to go for me. I gotta stay focused and grind, so I can get there.
Exactly. Yeah, now I can coast, but now I'm having more fun than I've ever had before. I mean, why coast? Jesus, right? I've worked to get to this point now. So, all right, now you're one of the top brokers, commercial brokers in your county. Obviously, I want to talk to you about what's going on and the fact that you're out in California. California is kind of right now, based upon I was looking at real data today and other sites that California tends to be on the leading edge of this bubble and this burst that's going on right now. I'm out here in the Boston market. It hasn't hit us yet. I mean, we're still seeing stupid numbers. We're still seeing things not sit on the market very long. But what's going on where you're from?
Yeah, so the Bay Area, Silicon Valley, it depends really on a market segment. What's going on because it's very differentiated. But in general, everything is on ice. Everything is frozen at the moment because the Fed raised rates quickly. And what that did is crush all development that wasn't already started.
Right.
So everything's on ice. Everything's on hold. Everyone's trying to figure out where cap rates are at, where interest rates are going. And it's easier to do nothing than something. And what happens in these market cycles is sellers are still kind of greedy from where the previous market was 3 months ago, 6 months ago, last year. And they haven't realized that the property now is worth substantially less. It's starting to happen. And buyers are like, well, why do anything now? The market's probably going to get better for us to buy. So let's just sit and wait. So in general, that's what's happening. San Francisco is a unique case. It's bad if you're an office owner right now.
Yeah.
Technology companies laying off massively. There's a lot of problems structurally in the city, and the office market in the city is going to be a bloodbath. It's just going to get worse.
Yeah.
Industrial has been good for repositioning. Industrial uses are strong. Upgrading to what was either residential condos or biotech. Life science really drove the last kind of run up out here. It's also been in Boston. And then multifamily, there's a lot of new laws here in California relative to rent control, limits on appreciation. There's all sorts of things going on. But there's still just a tremendous amount of money out here. So cap rates got driven down really low into the 3s and 4s with people betting on appreciation. So
are you still seeing a lot of foreign money?
No, the China money dried up years ago.
Really?
3 or 4 years ago. All the money, is pretty much, institutional, local money, tech money. But the foreign China money, which drove this for a while, is disappeared 3 or 4 years ago.
All right, let me take you through the market changes that you just kind of mentioned. So when you're talking about the things kind of went on ice, when you were what happened, like when the interest rates, the Fed started creeping up the interest rates, did you have deals under contract? Do you have people walking away from deals? Do you have people walking away from escrow money because they just didn't even want to get in the deal? What happened in that case?
That's a great question. So I represent a couple big institutional hedge funds, and we were in the middle of deals on industrial deals in the fourth quarter of last year. And when everything started to panic, I'll give you an example. One deal, we were in escrow at $34 million on a sort of land cover industrial play. And the buyer asked for a $6 million retrade, and we got it.
Wow.
So, bam, the seller was like, we need to do this deal. And so they retraded down. Some other deals, guys walked away from escrow money or tried to retrade. And so there was a period, things move fast, probably last October, November, something like that, when all this was going on. And then after that, everything kind of froze. And now I'm seeing deals that blew up, people calling me back, say, hey, would you still do that deal? And we're like, no, that deal's gone. We got to reset the price.
Yeah.
But at the tail end, smart guys, I think, took the money and retraded, and other people just walked. But I was able to get a number of deals done. And industrial is probably the strongest market segment.
Right.
But right now, it's interesting is, there's not a lot of inventory, and there's just still a lot of money out there, and no one knows where the market's at, so not much is getting done.
Okay, so let's talk about development. Did you see some of the banks changing their underwriting where they just said, no new construction, we're not even touching it? And also, do you see a lot of, ground that's been broken now just sitting there waiting?
Everything that was broken is moving forward. So out here, most of the new construction, residential kind of really slowed down prior to biotech slowing down.
Yeah.
Biotech was a huge boom. Those projects that were underway are continuing, but I'll give you an example. A company called Alexandria, probably the biggest life science developer. They dropped a couple projects that they had entitled, that they had under option. One with a big project with Prologis, a big industrial group. They just iced everything that wasn't under construction and put everything on ice. A lot of the residential apartment builders iced every project that wasn't already started.
Really?
And construction lending, I mean, the rates now to get a construction loan are like 8-9%.
Yeah.
So, everything is that just like stopped everything outside of deals that had to go forward. And now it's everyone's kind of, trying to regroup and figure out where things are at. Interesting.
Okay. Now, what about, you're old enough to know what this market is like. You've already been through this once before. How is this the same, and how is this different than back in 2008?
Well, unfortunately, I look young, I think. I've been around to two unfortunate cycles. One was the .com meltdown.
Yeah. Well, I've been through four.
All right. Yeah. So yeah, I started at the end of the third one in the probably late 80s, early 90s with the SNL crisis. But
okay, well, that was I'm counting that was as the first one.
Okay, what was the second?
That one, then the mid 90s was another one, and then the 2000s, then the .com, and now this one. So there's four.
Okay. Well, in 08, it's good. It's an interesting question. I try to be like a defensive back with a short-term memory looking forward, but the lessons that we can, because all the deals that go wrong, you like to forget about them.
Exactly. But you never forget the ones that were right.
Right. But I'll never forget the ones that went wrong. So I'm driving down the freeway going, I lost that deal. I try to forget about it. This one.
Now, do you do that when you drive by those properties?
Yeah. I try to just focus on the car in front of me, because every deal I've touched on and I'm like, either a good memory, but often a bad memory.
Oh my gosh. Well, hold on.
As many as you lose, unfortunately.
Brenton, I started out in the insurance business, selling group insurance. And so today, as I'm driving down the road and I see a truck goes by of a company that I used to insure, I was like, oh God, no, PTSD. Oh no, don't look at it. Don't look at it. Don't have the flashback. Don't do it. Yep.
Exactly.
I know how you feel.
Control our thoughts here. In 08, I remember there was it was different. It was an office building boom going on. And I remember sitting with, I had a tech company. Back then I used to represent, all I do now is look for off-market sale deals, investment deals, deals to put together.
Yeah.
Back then I was representing a lot of tech companies as more of a real estate agent broker. And we had this big tech company, and I met with this billionaire, Arriaga, and they were building 14 new buildings. And he basically told my client, I'll never forget this. He goes, look, give him a 200-page lease. He goes, listen, here's the deal. You can read the lease and make as many comments as you want, but we're not going to change anything. So here are your options. You can sign the lease today and you pay $4 triple net in rent, or you can go home and read it and come back tomorrow and sign it and the rent's $4.50. Okay. Or if you want to wait a week or two, we may be out of buildings and the rent could be $5. You decide what you want to do. And so my client signed the lease. We didn't really have any options. There's not much to read. You know, it's the golden rule. Those with the money make the rules. Well, with the .com, when the .com hit, I mean, the rent literally in office dropped the next week, 50%. And everything just went on the market for sublease. And it just took years for the office market to recover. But during the .com, the residential market stayed good. Yeah. So that was pretty strong. Okay. In the last cycle in 2008, everything kind of went to hell. Yeah. There was just like no deals. All the brokers got depressed. I was in a big office back then. I went from doing like 30 deals the year before to doing 2 deals. I did 2 deals in a year. Most guys went on vacation. It was just completely ice. Yeah. So right now, today, it kind of feels similar to 2009, just not as desperate. Like the whole world didn't collapse. Now we're in a state where no one really knows. A lot of people are saying the Fed's going to cave. It's just everything is so driven by the Fed now. We're just everything is like addicted to the fuel of interest rates, and nobody wants to do anything. In 2008, 2009, the whole world blew up. So this is very, very different. It is only similar in the fact that nobody's really doing deals right now. And the one good side is that industrial leasing is pretty strong. People are leasing and doing deals. But outside of that, the residential market, the commercial market is just, the only way to really explain it is just kind of iced with everyone stunned and no one knowing what to do. Not sure if the world is falling apart or not sure if the good times are going to roll again. So that's sort of where we're at.
You know, I'll give you a little, once again, you just dragged me through the PTSD because you just reminded me of when I started my benefits administration company. I had a partner, but the partner was still working for a competitor at the time that we were starting this company. So I had jumped ship and I was starting this and I was trying to go out there and get my first client. And my first client was a guy named Ernie Bach. Now, if you're from New England, you know who Ernie Bach was. The guy was a billionaire. During the savings and loan crisis, he went around and bought all of the office buildings for cash, and that made him a billionaire. But he owned the Subaru franchise for New England. If you wanted a Subaru, it went through Ernie Bach. And I'm sitting in his office, and he was an auto dealer, a car dealer, sold cars since he was a kid. And I'm sitting there. He goes, "Listen, look out the window. You see that guy getting out of his car right now? That's your competition." And I look out the window and it's my future partner getting out of his car, coming over there. And he goes, "You give me this price and I'll tell him to go home." and so like, I already knew what the price was going to be because we already talked. And so I ended up getting my price like that billionaire guy did. But we never made any money on Ernie Bach. Ernie Bach, that's why he was a billionaire.
That's why he's a billionaire. How to make money.
No one made money off Ernie Bach. Yeah. So, yeah.
You try, you're just happy to do business, but sometimes you gotta, it's better to find the next guy. I don't know.
Yeah, exactly. You just gotta what do they say? Like you can't make up a lost profit on volume, something like that, and that's what this guy was asking me to do.
Better do no deal than a bad deal.
Exactly. All right. So tell me a little bit about these rent control laws. What's going on in California right now?
Yeah, well, in San Francisco's always had rent control, and older apartment buildings, you can only raise the rent 1.1% or some almost 1% per year. So you have probably a little bit like New York, you have a really strange rental market. So for older buildings, you'll have market rents that should be $6,000 a month, and the tenants being $1,500 a month. And And now that started to creep out where I think the state passed a law that you can't raise the rent anywhere in California over 10% in 1 year. And then a lot of local groups are looking at different laws relative to protecting tenants. But the problem we have out here is very difficult. You know, there's a lot of people moved out of the Bay Area during the last boom or last few years with COVID, and people started to move back in, but there was nothing available. So it was really difficult. Now, you know, there's more availability, but it's really difficult to get things approved. So to me, it's a supply demand problem. If it's too expensive to build and it's too arduous and too complicated and the cities have too many regulations, you don't build any new supply. You know, once they're just going to go up, and then you artificially try to lower them, then it creates these really inefficient markets. So it's really scary to a lot of investors in multifamily. What's going on? What are the rules? What are they going to do to me? What might change in the Bay Area and California overall?
All right, so let me give you this analogy. In 1953, Detroit hit its peak in population. Fast forward 50, 60 years, you know, you got Detroit, you got New York City. In 50 or 60 years, will San Francisco look more like Detroit or more like New York City?
Well, it's a great question. San Francisco and the Bay Area is sort of the center of the world of technology, and technology is advancing very, very, very rapidly with new AI technology, all sorts of things. But San Francisco, you could make the case, I heard this case, that it could be like Venezuela, with just natural resources of oil. There's a lot of countries with just tremendous oil wealth who have blown it and are just complete disasters.
Right.
San Francisco is driven out now with COVID and regulation, Pinterest, Airbnb, all these companies work from home, shut down. Twitter has got to be moving to Texas soon. Charles Schwab, the list goes on of big companies that are relocating to Texas and elsewhere. But, you know, we're very arrogant out here because we're like, well, it's Silicon Valley. We have great weather. It's a beautiful city. We have food. So I think if I had to bet on it, I bet it's going to look more like it'll make it through and it'll rebound. And there's just too much technology excitement in the future and it's around here. But it's not an easy time, and they're not making it easy.
You know, I'll tell you that open AI. Oh my gosh, I've never been so prolific as a writer.
Another company that Elon started.
Yes.
I realized he started that company as well.
Oh, that guy's brilliant. I love him. I love him. What he does, he's changing the world like we've never seen before.
Like no one before. But his first question, I have a friend who just interviewed for his Neuralink company, where they put a chip in your brain. And the first question on the interview is, are you willing to relocate to Austin? So
is it really?
Yeah. So that, unfortunately, it's sort of the sad state of what, you know, if we had more open, favorable policies, what Silicon Valley could really be. It still is amazing, but at difficult times right now, with just so many unknowns.
Okay, final section I want to talk to you about is where you are now. You talked about it where you spend your time putting deals together. Take me through your career journey from just being a broker, and we all know broker means that you're broker than anybody else. I mean, you've done well. How did you go from that guy schlepping, working on commissions, to being the guy who puts together the deals and keeps a piece of the action? Like because here's the thing, Brenton, so many brokers never get to that stage. So how did you do it?
Yeah, it's interesting. I was raised in Colorado, Wyoming with a single mom, and I moved to California in 93, 94, which was kind of right after one of those setbacks that you had mentioned.
Yeah.
And so in hindsight, that was a little bit favorable for me because the economy was a disaster and I didn't know any different. And I had my first mentor basically said, I couldn't find a job to begin with. So the only job I could get was a straight commission job.
Yeah.
So, and I'd always been interested in real estate. So that was my options. And he basically said, hey, look, you go out on the streets every day and you pick up 30 business cards, and then you make 30 phone calls a day, or 40, 50 phone calls a day and 30 business cards, and you do that every day. And so that was my day, and I just did that every day. And so in hindsight, I came up the hard rocks way, right? I wasn't like on some team where they just handed me deals. I had to go out and hunt every day to find deals. So to sort of build up toughness, and you realize how difficult it is to make money and find deals, you're like, how am I going to get on the other side and invest in these deals and own property? And so I became sort of obsessed with that idea of how to get into the game. And because the advantage of being a broker and an agent is you can make a lot of money, but it's not recurring money. At least in the insurance business, you can get recurring revenue. So you gotta transfer into the other area to get cash flow. And it just depends on, you know, where you're at and how you go about doing it. But you got to either buy property or invest with your clients, or, you know, hustle to get started. And I always say, hey, you know, if you're smart and young, if you find the right deal, the money will follow. So try to find the deal and bring someone in with money, and then negotiate a piece of the action. Don't worry so much about your commissions all the time. So,
all right. So what was the first deal for you where you kind of jumped the wall onto the other side?
The first deal for me was crazy. It was, I was 20, in my mid-20s, I think. And I'll never forget, I was having pizza with my first wife, actually. We're eating pizza at a restaurant, and I'm looking through the real estate magazine, and I found the cheapest 2-unit building for sale in San Francisco. It was $234,000, and it was way out in the sunset, out by the beach. It was not the nice beach, not the best area of town. And all my friends were renting nice little apartments in the fun part of town, having a ball. And I'm like, we got to buy this. And back then you could get a loan with 10% down. So I needed to come up with $23,000, but I didn't have $23,000. So I called up a mentor of mine, and he came up with a kind of a creative solution, right? I had a couple of credit cards, and I could represent myself on the deal. And so, which would have been 3%, which is $6,000. I had like $5,000. We put together the money, and I created a sort of, I put it together an offer, but the problem was the building had tenants in it. And so I kind of got really lucky during escrow, because I was trying to buy the top tenant out. And she turned out, believe it or not, this woman was a witch. And so she would have seances upstairs.
Only in San Francisco.
And not only that, then there's a big foundation problem. And my buddy's like, don't worry about the foundation. You just got to close the deal and get the building. Everything's overblown. People get nervous. We can fix that. So in escrow, she ends up having a fire. So she burns down the kitchen and part of the building. And so I'm like, okay. So she wants to move out. I got really lucky. So I gave her like $2,000 in cash that I had, and she moved out. And then I got the insurance settlement.
Yeah.
When I closed escrow, because I was in contract to fix it.
Right.
So I closed the deal. I got my commission back. I got a credit back to my construction company to do some work from the seller. And I actually bought the thing almost basically no money down. I actually made a couple grand when I closed. And then I used that to kind of fix it up. I moved in, I got a new tenant downstairs. I ended up selling that building that I bought for I ended up refinancing it 2 years later, and I took money out of that deal to do another deal.
Yeah.
But mistakenly, I sold the building like 7 years later for like $680,000 or $700,000.
And you thought you hung the moon.
And I thought like, wow, I had to sell it because I got divorced, unfortunately. And I thought, hell, I'll get rid of it. It was a great deal. And, sitting here today, I'm like, oh, I gave that thing away. So,
yeah, exactly.
It's, you don't get rich. And another wise guy told me, listen, you don't get rich by selling real estate. You get rich by buying real estate.
Yeah.
So,
here's what I heard. Real estate always makes money.
Yeah.
And I said this to a real estate guy. He looked at me funny. I said, you just have to own it when it does.
Yeah.
And he says, yeah, that's true. That is true.
That is true.
Yeah.
So then you take that, you do one deal, and it leads to like trying to put more deals together. But the mistake I made is selling stuff, thinking I made a bunch of money, and then it just continues to go higher. So,
all right, last thing, would you agree that all business, especially this business, is all about sales and marketing?
Yeah, I think the reason I got successful in brokerage, I was a pretty good salesman, but I looked really young, but I had better data than anyone. I built before when I got in the business, there were index cards. Everyone had index cards and they were calling people. I built out one of the first CRMs.
Cool.
And I just had better data. I did great marketing. I hammered the phones. And today it's the same way. It's about marketing yourself.
Yeah,
It's about getting leads. It's about relationship. It's about being a good salesman.
exactly.
But that's the hard part, is just a lot of people picking up the phone and calling a guy to see if he wants to sell. It's not that difficult, but people don't like doing it. That's the key. It's about finding the deal. The rest you can, like, it's not my strength. Asset management and then property management. You gotta cover that. But if you don't have the deal, the rest is waste of time. You gotta like dig up, build your reputation, and find the deal, and you can make a lot of money still, because it's really inefficient. It's not the stock market.
You know, I'll tell you something. Great, amazing point, Brenton. I got to tell you that you're singing my tune. This is what I teach my clients all the time. Like, guys, you know, it's a sales and marketing business. If you don't ask the guy to buy, to sell, you're not in the business. If you're not making offers, this is nothing more than a very expensive hobby. And you don't make any money in a hobby. You got to get out there and ask the guy to sell him your property. So
right. Yeah, you got to you can't be afraid to make. I bought some good deals by making embarrassing offers.
Yeah.
And guys come back to you. But if you're not making offers, and one of the great things about what you do is your system is it looks like you take out a lot of the risk of doing a bad deal, but you also, help people figure out how to like make offers, dig up leads, and do all of that work, and simplify it. But like you said, you got to be like, there's no replacement for hustling and making offers.
Exactly.
And doing mailers and making calls, and then good things happen. It's just
I teach my students to use that one marketing tool that has worked every single time it's been tried, and that's direct mail. Okay. And then the other thing I teach them is that if you can't hang your head in shame after making an offer, you've offered too much. And who cares if it's too low? You're not going to marry his daughter. Just move on to the next deal and find a guy who's going to say yes. Find a guy who has to say yes because he's getting divorced and he bought it from a witch, and now it's your turn to make the money off.
I'll give you one last quick story.
Yeah,
I was a broker in the office, and one of my business partners, he had a listing on this building, and the guy wanted too much money, and it was the top of the last market, and the guy's asking 4 million, okay, and it's worth 3.5 then, and no 4 million, he get offers at 3.5, 3.6, never took anything. Yeah. The market starts to fall apart. Some guy brings in an offer for 2.5 million, and I'm like, dude, that's a joke. I can't believe you're going to submit it. So he submits it, and the guy panics. He calls him up. He goes, I'll sell for 2.7. And I'm like, oh my God, I'll buy it for 2.7. So I bought the building for 2.7. And I always remember, I'm like, I laughed at the other guy for bringing an offer in for 2.5, thinking the guy was a waste of time. And I'm like, well, no, that actually spurred the guy. And what happens in this cycle is, I think will happen again, is that people were too greedy. Then they start to panic on the downside and say, maybe I'll sell it, and maybe they'll sell it for a low offer. So in this type of market that's coming, I think now's the time to actually bring in lower offers.
Exactly.
It may not have worked the last 2 years when the market's going crazy, but it's going to start working again.
I teach my students, what's the biggest lie in multifamily? Do you know what the biggest lie is? The asking price.
Yeah. Okay.
Just make the offer that works for you and move on.
See, multifamily, I don't know at all. And that's one of the reasons I'm interested in talking to you, is because there's a lot more things like an industrial building. I know it's one building with a lot, but multifamily, there's like so many different buildings with pools, 2-story, bad tenants. There's a lot more unknowns. And I think it's a little bit more difficult to figure out what a good deal and a bad deal is.
Yeah, that's interesting you say that, because I don't look at it as the unknowns. I know some guys that they're so big, they've got this thing just turned into a science that they just look at the financial statement and they buy it. They don't even go out and see the property, because they just know this is what I can do with this property and this is what it's going to cost. And they can control the tenants. They can, eventually get, within 12 months, you can get those bums out of there, and you can, turn the property. But, but when you're new and you've never done it before, it scares the daylights out of you. I mean, I bet you that house with the witch's house scared the daylights out of you buying it.
Oh yeah, the witch, the foundation problem. By the way, I fixed it
Fire.
for $8,000 was no problem. People freak out about all sorts of little things because
Yeah.
but it's scary.
You know, one thing that you learn, I'm not kidding you. The guy that I just interviewed on a podcast just before you is a public insurance adjuster. And I said, hey, have you ever heard the joke that there are 3 multifamily owners in a bar? And he looks at me and goes, no. I said, well, yeah, the first guy says, I had a really good year. And I can't believe I'm saying this again because people are going to have to go through this joke for the second time in a podcast. Because first guy says, yeah, I had a really good year. One of my units burned down. 2 other guys goes, yeah, that's a really good year. And then the other guy says, I had a better year. One of my buildings burned down. Yeah, that's a much better year. And the third guy says, I had a tornado come in and tear off all of my roofs. And the 2 other guys look at him and said, who'd you get to do that? See,
Yes.
I tell you, when you're in this business, you love fire. That's not a bad thing. That's a good thing.
Right? Yeah, it turned out to be, you're right. It turned out to be a blessing. So
Yep.
I guess the point is, last thing I'll say is controlling property is good. Getting something under contract. Good things happen when you control property.
Exactly.
And last year I was able to buy a building for 11 and I sold it for 13 and I never put a penny in the deal. I just, signed the contract over and $2 million in profit,
Brenton, another one of my sayings is nothing bad happens when you make an offer.
Yeah.
Nothing bad happens. Just make the offer. So,
Yeah.
Brenton, great to have you. Great to meet you. Great to have you on my show. You're almost as cool as I am. I know you got the
Notice I'm almost as cool. I don't have the cool glasses. I need a haircut.
I know.
But,
I got that. I got that.
the vibe.
I got the kind of Lynn did a nice job last night on my hair. That's my stylist. She did a very nice job.
Well, if I ever get out there to meet you, I'll have to look her up.
Oh yeah, no, I'm gonna keep you away from Lynn. No chance, man. You're not meeting Lynn. So, all right, Brenton. Hey, good to meet you, and we'll see you around.
Sounds good. Pleasure.
Thanks, buddy.